Let's just go ahead and give you a welcome. I'd like to welcome Tyson Clayton here, creator and co-founder of WealthyTrades.com. Tyson, thanks for joining us today.
Yeah, hey, thanks a lot. And I apologize for running a little behind. Got the time frames a little mixed up. I'm in Central Time, Minnesota, so I apologize for being a little behind. But let's get things kicked off. Want to thank MoneyShow.com for hosting this. Again, my name is Tyson Clayton, and today we're going to be talking about high probability trend trading and ultimately trading like a market maker. That is the goal. And anybody who's listening right now should want to trade like a market maker, because those are the traders that really control the market action and what the market's going to do. They are the best hedgers and traders in the world. And some of those guys use the tools that we've created at WealthyTrades.com. So let's dive right in and get started. First, before I do, I want to real quick go over the disclaimer. This is also on our website, WealthyTrades.com. We do not guarantee the things I want to highlight are the things that are underlined. We do not guarantee any of the information will result in profitable trades. Investing in any asset does have risks of loss, potential loss of your initial principal, and your overall account size. Past performance is not necessarily indicative of future results. This website does obtain and have opinions, mainly my opinions, and they are not trade or investment recommendations. We are not financial advisors or tax professionals. And WealthyTrades.com, we use a third-party data vendor, BarCharts.com. And if you would like more information about bar charts, they pipe our data in. You can go to that link again on the WealthyTrades.com website. So again, thank you for allowing me this time. Again, I apologize for being a little late. There was a question on whether this was going to be recorded. I hope so, and I hope that I can get this out to everybody. There's going to be a lot of good information that I'm going over. I'm sure the other speakers will have some good information also. My name is Tyson Clayton. I've been trading for 16 years. I've pretty much traded everything. Started in Forex, actually, and then futures, and now I mainly focus on stocks and equities, but I kind of still do trade everything. I also even trade binaries. So, but initially I co-founded a company called Elite Trading Systems. We were one of the first automated trading system vendors out there. It was in 2003, 2004, and we also were one of the first that I know of day trading specific chat rooms. So also that kind of morphed into Elite Managed Forex, which was an automated currency fund for institutional speculation funds. Most recently, I was a general manager and education director for one of the largest trading and investing schools, and worked with thousands and thousands of students, and it helped people become successful within trading and investing. That's kind of led me to Wealthy Trades. As I was working with individual traders and investors, I realized there's a lot of individuals that are looking to have a systematic, successful approach to the market, but they fail to have that systematic approach. And a lot of it is because they're kind of flapping in the wind like a flag, and they don't have a systematic way of defining a trend. And I say all the time, and I've got videos on WealthyTrades.com, but I say all the time that you first need to have a bias, right? A directional bias to trade in before you should place any trade. It's very important. Unless you're an options trader, you can do non-directional trades. But if you're an equities trader and you don't trade options, or even a currency trader or a futures trader, you need to have a directional bias, and that directional bias needs to be based on something logical, black and white. And most traders out there don't have a systematic, logical way of defining their bias or their trend. And if you don't have that logical, systematic approach, then you're essentially going to be trading blind. And what I believe it happens is it causes confusion. And in this business, if you've been in this business for any amount of time, you know that confusion not only causes stress, but it causes losses in your account, and that's never fun. So we're going to go over next 45 minutes. That's obviously going to be cut short, so I'll kind of be going quick. But we're going to go over why trading with the trend is so important. Everything we do at WealthyTrades.com is focused around trend trading. Very, very important. Also going to go over how do you correctly define the trend. Working with thousands of students, there's so many different ways to define a trend out there. But I've come up with a very logical, systematic approach of defining the trend. It's based on my years of experience in automated trading and back testing, and I found the best possible way, in my opinion, to define the trend. And then we're going to talk about how you maximize the odds of your success, and ultimately, how do you trade like a market maker? How do you know that you're taking trades that you have the probabilities and the odds in your favor? Even if this one trade doesn't work out, how do you know that if you consistently take these trades, you will be profitable over time? And that's very important. And wealthytrades.com is the tool and is the site that can help you with that. So let's start. Let's go. Why is trading with the trend so important? And the answer to that, and this is what I'm going to go in depth in this webinar on, is trading with the trend increases your odds of success substantially. I am first and foremost a probability trader. I need to know that I have an edge, whether it's a pricing edge with an options that's misvalued or undervalued or overvalued, or I need to know that I have an edge based on historical probabilities. And that's very important. And trading with the trend will help you increase those odds substantially. But how do you correctly define the trend? We got to start there, because there's so many different ways to define a trend. You can use trend lines, you can use ADX, you can use all kinds of stuff. And there's a lot of really good ways, but there's one best way that I've found. And so I want to go into this. And what I've done in the past is I've taught classes of hundreds of students, and I typically start with a chart on the board, and it typically doesn't have anything on the chart. This chart here has trend lines. I typically have a chart like this, and this is a chart of the S&P 500, and it's a few days ago. And I typically say, okay, what is the trend? And I have them come up and write whether it's up, down, or sideways. And I'll tell you, if I had a class of 100 people with this chart, let's take the trend lines off, I'd say probably 40 of those students would say the trend is up. Another 30 might say the trend is down, and another 30 or so would say it's sideways. And even with the trend lines, all right, even with the trend lines in place, there's an argument to be made that we're in an uptrend, right? Well, we're in an uptrend because we've most recently broke kind of a minor trend line, and we've broken closed above that, so therefore we're in an uptrend. But what about these major trend lines that we haven't broke above? Okay, so I can make an argument we're in an uptrend, but then we can also make an argument that we're in a downtrend, because again, the major trend lines that haven't been broken, it looks like most recently we've put in a major pivot high and then a major lower pivot high, so therefore maybe we're in a downtrend. And the other 30 people would say, well, you know what, no, we're not in an uptrend or downtrend, we're moving sideways. And I got to tell you, that's one of the most frustrating answers I can get from traders, is that, oh, we're in a sideways market. The one thing that I've concluded in my trading is we're never in a sideways market. We're always either moving more up or more down. And as long as you have a logical, systematic approach to defining the trend, you'll realize, yeah, the trend may not be great, but we are either moving more up or more down. So there is a trend within this market, but using trend lines, what it does for me is it causes confusion. And out of the thousands of traders that I've met, I've never met a trader that consistently uses the same exact trendline approach every single day on every single time frame to consistently, logically, systematically come up with a trend. And if you don't, you're kind of doing one thing one day and then another thing the next day. And that's never good. So what about moving averages? Okay, so moving averages are good. And in fact, they're probably my second favorite way to define a trend. The issue with moving averages is, what are the proper settings? I could probably take a poll of the 100 people that are in this webinar right now and say, well, what are the proper settings you should use on a daily chart? And again, this is the same daily chart of the S&P 500. And this is using a 21-period simple moving average, which is the blue line, and a 50-period simple moving average. And if I define the trend this way, then it's as simple as saying, well, the average price over the last 21 days, which is 208.20, as indicated by the blue line, is lower than the average price over the last 50 days, which is 208.63. So therefore, we're in a downtrend. If I use a 21 and a 50, but what if I don't use a 21 and a 50? What if I use a 10 and a 50? Well, then in that case, then we're moving up. So depending on the settings I use in my moving averages, it tells me which direction we're moving in, and therefore it allows for confusion once again, which again, confusion is the killer of all traders. You can't allow confusion. What we do at Wealthy Trades is we focus all our trends based on pivot analysis, all right? And this is trend 101. It's pivot highs and pivot lows. And what I mean by that is this, okay? So this is a snapshot of the wealthytrades.com chart, which is in our platform. And essentially, we've made it as simple as purple bars indicate a downtrend and green bars indicate an uptrend. It's as simple as that. Do not get us confused with the old people red light, green light. It's not that. It's just simply, if we have purple bars, what it means is we're most recently closing below pivot lows. If the bars then turn green, it means we are most recently closing above pivot highs. So therefore, as you can see here, the bars in the SPY turned green because we had a break and a close above this prior pivot high. They stayed green until we broke and closed below this pivot low, and vice versa. As you can see, this then changes green and purple. This is the way we define trend on every time frame and everything we do on every asset class. So you can go into wealthytrades.com and type in Netflix or type in Google or type in whatever stock that you like, and it'll tell you what the trend is based on pivot analysis and closing analysis right away. It gives you these charts right away. But it's a systematic, logical way on defining trend. There's no, as you can see, there's no yellow bars here. There's no white bars indicating a sideways trend. It's either down or up, and that's based on, are we closing above pivot highs or are we closing below pivot highs? And closes are very important. They're confirmation of the move. We don't want fake moves. We want real moves, confirmation moves based on closes. So that is the way we define trend, and historically, that is the most profitable way. And I'm going to prove it over the course of this webinar that is the best way to define the trend. Now, again, this is just the snapshot of the clean wealthytrades.com chart that you'll see on our website. Just purple bars indicate a downtrend, green bars indicate an uptrend. We define this on a daily, on a weekly, and a monthly basis. Very, very important. So pivot trend analysis increases your odds of success by using the Wealthy Trades data. Now, that's a very bold statement. Anytime somebody makes a bold statement like that, like it'll increase your odds of success by using something, have them prove it. Say, okay, well, great, but prove it to me. And that's what I'm going to do right now. But before I do, I need to go into what the Wealthy Trades data is. And this is kind of the guts of what we do and kind of everything that I do on a daily, weekly basis. Levels to win is essentially, it's a proprietary blend of calculations using volatility and price ranges that essentially forecast the next day's price movement, the next week's or the next month's expected ranges. And we'll go into some live examples on the website in a minute here. But we use those levels, and then we calculate the historical reactions off of those levels. For example, if a stock trades at $100 and it's got an expected high of 101, well, what happens, how often does it hit that 101 historically, and what happens after it hits that 101? As an options trader, that's extremely powerful information because then I can structure trades, find calls that are undervalued, different things like that around there. And why is this so important? Well, it's so important because using the historical volatility and price ranges help predict future price movement, and they also help each trader trade with the trend, pinpoint entries, and manage risks. And we're going to go into look at this real deep in some examples here. So I'm going to use the same chart on the SPY, okay, and we're going to stick with the weekly basis. So this is the S&P 500 ETF. It's the SPY. The SPY closed last Friday at 207.95 was the price it closed at. The 207.95 is exactly the same distance. We've got an expected high, so we're moving up. That's indicated by the green arrow up, and this is all on wealthytrades.com. We've got a trend side, the expected high for this week, because we closed last week at 207.95. The expected high is 210.47. The expected low is 205.43. Okay, I know that we closed at 207.95 because the high and low are exactly the same distance from the closing price. So that's where we closed. Even though this is blank, we did close at 207.95. But here's the proof, just in the SPY, that trading with the trend makes more sense and gives you a higher probability. The fact that we closed last Friday at 207.95, we have an expected high 210.47 and an expected low 205.43, but it's got a 40.4% probability historically of hitting this upside level. It only has a 38.5% probability of hitting the downside level. That's not a huge spread, but even with that information, it tells you why would you go short when you know you have a higher probability of hitting the upside. These distances are the exact same distance from the closing price. Levels on levels, this is a very important indication, especially for options traders. This is telling me, okay, we closed at 207.95. Well, the expected upside is 210.47. Historically, it has a probability this week of closing above this level. It has a 30.8% probability historically of closing above that level. Very, very powerful. And this also shows the power of the trend because it only has a 21.2% probability of closing below this level. Very, very powerful information. I'm going to show you an example of how you can use this information in a minute. The other thing we know is when it hits this levels to win profit, all right, and we display this information on every stock for daily, weekly, and monthly on our website. So in the SPY on a weekly level, what we know is when it hits the upside level, which has a 40.4% probability when it hits that level, more often than not, it continues to rally and closes the week higher. We know that because it has a levels to win profit. This is showing us that historically, if you would have traded at this level each time, you would have historically made money trading at that level. Whereas on the downside, let's say the SPY sold off Monday morning, it ended up selling off and it hits the downside low, which can happen, all right? It happens 38.5% of the time. Well, that's a good place to place a stop simply because we know historically when it hits that level, it ends up closing lower by Friday because it loses money. This is always in the direction of the trend. So let's actually go into an example. This week, if you're a stock trader, what you could have done, what would have been the right thing, just looking at the SPY, what would have been the right thing to do is go long the SPY with a stop at 205.43, then closed at the end of the week. Oops, closed at the end of the week. And the reason why is because the SPY is in the uptrend, is in an uptrend, and has a higher probability of hitting its upside. We know that. Okay, that's great. And keeping it on all week without any target, so don't have a profit target, is the way to go. The reason why is because it not only has a high probability of hitting the upside, but when it hits that, it typically ends up continuing to go and close higher. But we want to have a stop of 205.43 because that's the expected low, and the fact that it loses money historically at that level, that's where we want to place our stop. This is all information that I just type in the SPY, bam, this all comes up for me very easily at wealthytrades.com. All right, so trading like a market maker, this is what I do a lot of times on a weekly basis. I take these type of trades, using this data to find options plays that are either undervalued or overvalued and take advantage of that. Here's an example. What you could have done, and this trade actually didn't get filled, but these trades are out there all over the place. You could have looked to sell the 205 put, so kind of done a bull put spread. So you'd sell the 205 put and you'd buy the 204 put. So you'd create that dollar spread, right? It's called a bull put spread, and you'd collect 23 cents on that. Why would you want to do that trade? Well, if we've got the expected low of 205.43, which is above our bull put spread, then, and we have a 21.2% probability of us closing below that. If I collect 23 cents on a dollar spread, that means I'm collecting 23% of the spread. So get this, the expected low is 205.43. It only has a 21% probability of hitting that. That means I have a 78.8% probability of this trade being a profit as long as price closes above 205. That right there is putting the probability in my favor because I'm getting paid 23% on a 21% probability or on a 78% probability of success. It's that simple, all right? And it's using the Wealthy Trades information to structure those trades. Here's an even better trade, and one that I do. These are the type of trades I do all the time. Buy undervalued calls. And right now with volatility so low, you can find really, really good deals on calls and puts. And I'm going to show you an example in Priceline this week. But buying the 208 call this week, again, this one didn't get filled either, but I do have a Priceline one that did. Buying the 208 calls, what you could have done is put a limit order in at 95 cents. Why was that a good trade? Well, again, if I bought the 208 calls, right, and it rallies up and hits the expected high of 210.47, which happens 40.4% of the time, then my 208 calls are going to be worth at least $2.47, right? Because I have the right to buy at 208. It's now at 210.47, which means my calls are worth 247. Well, think about this. If I bought it at 95 cents, then my profit potential, if that happened, is $1.52. So I'm risking 95 cents to make $1.52 when I have a 40.4% probability of making $1.52. That is the exact type of trade you want to find, and using the Wealthy Trades probabilities is the only way that I know of to be able to find trades like that on whether calls and puts are undervalued or overvalued. It's huge information, and it's absolutely amazing. So what have we learned so far? Trading with the trend is very, very important. You have to have a logical, systematic approach. Moving averages are good. Just make sure that you use the same ones each time, every time. Other things are decent. The best way that I've ever tested is using pivot trend analysis. You must have a very systematic approach to define the trend. And understanding the future ranges, right, the levels to win information, understanding how far something should move based on closing price is very important. But then also understanding what are the historical reactions around those. Trading at that level, so in the SPY, if I traded at this level, I could go long 210.47 because it normally makes money there. Understanding that is very, very important. It helps you pinpoint your entries and manage your risk. Now, here's the thing. Knowing individual stats of a stock is really good, but at Wealthy Trades, right, we believe in collective data analysis. Right? This is a technique that uses a basket of stocks, not just the SPY or not just one stock, but we use a basket of stocks to establish our trend and to analyze the quality of that trend, because not all trends are treated equally. Not all trends are good. So we do this by looking at the 500 stocks in the S&P 500. And the S&P 500 is made up of 9 sectors. Okay, so there's 9 sectors, and these are all the sectors. And these are the number of stocks that are in each sector. So there's a little bit of a different weighting. But what we do is we do a scorecard method each day. All right, and we come up with our market trend. And again, I'm going to show you this on our website. We perform a scorecard process each day, week, and month. And in the above example, this is actually the example for this week, we know that out of the 502 stocks, right, there's a Google L shares and Berkshire Hathaway shares. But in the 502 stocks, we've got 72.5% of them moving in the uptrend. Anything above 50% indicates an uptrend. So we know there's 364 of the 502 stocks that are moving in an uptrend. So therefore, the market is up. So we're using a collective data analysis rather than just one asset class. We're using the entire stock market and doing a scorecard process. All right, this helps us establish our core directional bias. We can't trade without having a directional bias. We base that bias off of where the market's moving. And again, anything above 50%. So if this was 50% down, we would see a purple green arrow down. All right, but here's the thing: not all trends are created equal. Okay, so just because we're in an uptrend doesn't mean it's a good uptrend, right? It might not be that great of an uptrend. So what we do is we take this much further. We do what's called a trend quality analysis. And essentially what the trend quality tells us is, out of the 364 stocks that are in an uptrend, right, 72.5 of the 502, out of those stocks, how many of those stocks the prior period, so last week, how many of those stocks are hitting their upside expectations? So how many of these 364 stocks last week hit their upside expected high last week? That's kind of our momentum gauge, or what we call trend quality gauge. So as we know, the trend quality for this week is 42.4%. So we know out of the 364 stocks that are moving up, only 154 of those hit their upside. So the trend quality is below 50%. And if the trend quality is below 50%, it indicates a fairly low quality. And in a low quality trend, we don't recommend doing a full size position, directional position long the market or short the market. We recommend either doing a hedge trade, maybe a pairs trade, going short one market, going long the other market, doing a protected position with options, different things like that. Or potentially just cutting your position in half. If you normally trade a $20,000 position, cut it in half, trade a $10,000 position, because the quality isn't that good. If the quality is above 50%, it indicates a high quality trend, and you can be confident to take directionally biased trades. This is all done for you at wealthytrades.com. We take it further, though, than that. We do the sectors. We do that same quality basis. This was on the market. We rank the market, right? How many stocks in the overall market are moving up, and then the quality of the market. We do that same process on each individual sector. If you remember, each sector has their own stocks. For example, the XLP, the consumer staple sector, has 38 stocks. Out of those 38, we've got 35 of them moving in an uptrend because 92.1% are moving in the direction of the trend. So 92.1% of them, and the quality of the XLP is actually above 50%. So the XLP is a decent sector to go long because we know that 18 of the 35 hit their upside expectations last week. So the quality is decent. Now, if the market quality is below 50%, we wouldn't want to just go long the XLP, even though the XLP has a quality over 50%. We'd want to do a pairs trade, and I'm going to show you that in an example. So you might be thinking, well, that sounds all great, but it seems like a ton of work. And my response to you would be, yeah, it is a lot of work, and these are things that I used to do manually. But this is one of the exact reasons why we created wealthytrades.com, is kind of to do the work for you. And I believe that wealthytrades.com is probably the most simple platform, yet most powerful platform ever created. So let's put it all together. All right, kind of fast, but we know we're in an uptrend using the same stats. We know we're in an uptrend, 72.5 of the stocks in the S&P moving up. We also know that the quality is not that good. Okay, it's 42.5% or 4% over on the market. So at wealthytrades.com, we would either have a bullish bias and just trade smaller size, right, in the best sector. So maybe just go long the XLP, but just with smaller size. Or one of my favorite trades to do in this environment would be to do a pairs trade. Go long the best sector and then short the worst sector. And we rank these, all right, based on colors. So the best uptrend is best to last, and then anything in a downtrend, which is the XLE, is purple. So what we could do this week would be long XLP and short XLE because the quality isn't that good. If it was above 50%, we would just go long the XLP. All right, let's take it even further, though. We know all this information, uptrend. We know that the quality is not that good. The XLP is the best sector to be in, but we give you much more than that. We also tell you, all right, if the XLP is the best sector to be in, remember there's 38 stocks in the XLP. Why don't we give you the best 8 stocks within that sector? Well, that's exactly what we do. So the XLP is the best sector. We give you the 8 best stocks within that sector. But we don't just give you the 8 best stocks in the best sector. We give you the 8 best stocks in every sector, all 9 sectors, every single time. And those 8 best stocks are based on how often each stock hits its expected trend side level. So what's the probability that it's going to continue to rally the next session, continue to rally and close higher? That's what we want to know, and we give you the best stocks. For example, this week, KR, these are the eight best stocks in the XLP. All right. So within a few seconds, what we know, and this is literally within a few seconds at wealthytrades.com using the dashboard, we know that the market is up, the quality's not that good, the XLP is the best. Because the quality is not that good, we want to look for a pairs trade. So the XLP is the best sector, the XLE is the worst sector, the best stock in the best sector is KR, and the best stock in the worst sector is SWN. So what we could do is we could do a long position in XLP and a short in the XLE, and this is what I called out in my weekly forecast video for all subscribers. I do a daily and a weekly video. So we called out long XLP and short XLE. You could also go long KR and short SWN because XLP is the best sector, XLE is the worst sector, this is the best stock in the best sector, and the best down stock in the best down sector. Very powerful information, all done for you. It's extremely intense and somewhat complicated calculations in the back end, but it's all done for you, and I'm going to show you live examples in a minute here. Before I do, though, I know I'm moving kind of fast and just because I was a little behind. Before I do, I want to show you a trade using the Wealthy Trades information that I took that I'm in this week. And this is a trade in Priceline, and Priceline is in an uptrend. Okay, and I took this trade in Priceline because it has a high probability of hitting its upside expectations. All right, so it's in an uptrend. It closed last week at about 1187. Okay, so and it has an expected upside level today or this week of 1218.40. So 1218.40 is the expected upside, and it has a 50% probability of hitting that. Well, this is what I did. This week I bought the at the money, the 1187.50 call this week for $12.50. That's a phenomenal trade. And the reason why is because I'm going to target that expected high, that 1218.40. So if I do the math, if I bought the 1187.50 call and we rally up and we hit that expected high of 1218.40, which we have a 50% probability of doing, my call is going to be worth $30.90. Okay? That means that I'm risking $12.50 to make $18.40. Now think about this. I really want this to sink in. I'm risking $12.50 to make $18.40, and I've got a 50% probability of taking that. These are the type of trades that each and every single one of you need to find and need to be taken every time. I've got a 50% probability of losing this, yeah, but I've got a 50% probability of making this. It's the type of trades you need to take all the time. Priceline closed at about 12.90, so the call is up really nice. It's almost doubled already. My target's 1218.40, so hopefully I hit that by tomorrow. Looks like it's going to be a great trade, but I found it using the levels to win information. What I could also do even now is I could sell a bear call spread, maybe the 1220 by 1225 bear call spread, because when it hits this level, historically it closes below that because it loses money. And doing a bear call spread, I haven't done this trade yet, but doing a bear call spread above this is the way to go. Again, it's using the Wealthy Trades information. It's very powerful information, and you can only get it one place, and that's wealthytrades.com. So let's look at some examples for tomorrow, some live examples for tomorrow. Here's the Wealthy Trades. Here's the live Wealthy Trades dashboard. Okay, so this is a dashboard of the daily. So if you want to look at the daily information, which is updated at about 3:30 Central Time, 4:30 Eastern Time each day, then you can. And what this is telling us is based on today's close, we have 50.8 or 58.4% of the stocks moving down. So we're in a downtrend. We need to have a bearish biasness for tomorrow, day trading. But the quality is not that good. So if you remember, what we do is we do a pairs trade. Okay, so we would look to go long the short the XLY and long the XLE. Okay, because the XLE is the sector with the highest quality. If we wanted to find the best stocks to short in, right? The XLY is the best sector to short because it's got the highest quality. Well, then we can scroll down and we can get the stats of the XLY. We can realize, well, if we go short the XLY tomorrow, it's got an expected low of 75.85 tomorrow, expected high of 76.59, and put a stop at 76.59 if you're short, because when it hits that, it typically loses money and you want to get out of the trade. To take it further, here's the 8 best stocks to go into in the XLY. Okay, so you can look at those ones too. So for example, if I hit the plus sign next to that, I can hit the plus sign next to RCL, goes over into my portfolio, and it's there for some reason. There we go, RCL, and now I can click on that and pull up all the information for RCL. Same type of thing. If I go short RCL tomorrow, I want to put a stop at 74.37 because it loses money, but it does have almost a 60% probability, RCL, almost a 60% probability of hitting 72.07 tomorrow, and it closed at 73.23. This is extremely powerful information, and we give this to you every day at the close at about 3:30 Central Time. This information is updated. We also do this on a weekly basis and a monthly basis. This month, we've been long in the XLV the entire month. I'll show you that. And the reason why is because the quality is above 50%, and we're in an uptrend. So the XLV is the sector we've been long. It's looking really good, and the best stock in that sector all month long is CAH, which is looking decent. So that is the Wealthy Trades dashboard. We also have a resource tab that is jam-packed full of amazing videos that are absolutely free to all subscribers. So I did want to, real quick, we have an exclusive offer for moneyshow.com. This is absolutely exclusive. You get, this is for also all people in this webinar. You get 14-day all access to wealthytrades.com trial. No credit card needed, nothing. It is really good. I do a daily podcast in the resource center. I do a daily update and daily podcast that you'll get access to. So you'll get that. You'll get access to the dashboard, and you'll also get exclusive access to our earnings alerts, which I'll show you in a minute if I have time. But the webinar attendees also get our free ebook. We'll send this to you in email. It's Trade Like a Market Maker ebook. It's a great ebook packed full of strategies on how we use our information. You're going to get that free. And you also get a lifetime deep discount to wealthytrades.com. It's normally $99 a month. For the webinar attendees, it's $74 a month for life, okay, for life. And if you sign up right away, you'll get your first 14 days free and then an additional 30 days, so you'll get 44 total days for $74. And this next 30 days, everybody, this is important, the next 30 days is going to be jam-packed, full of awesome trades because we're getting deep into earnings season, and we have earnings plays. You'll get our all-access course. You'll get access to our options course that I'm putting together. It's going to be a market maker options course. It's going to be in-depth. It's going to be a $1,000 value once we put it on our website. But this course, for all webinar attendees, you'll get this course absolutely free. It's going to be about a 4 to 5 hour course. It's going to be a video course. And it's going to highlight specific strategies that you can use on daily, weekly, and monthly. And it's going to go over things like spreads, how did I find this price line trade, covered calls, rotation strategies, and even retirement strategies. It's huge. And there's a lot of companies out there and people out there selling courses like this for $5,000, $10,000. And we'll eventually sell it for $1,000. But you can get it for anybody on this webinar can get it free. All you got to do is go to www.wealthytrades.com, .instapage.com. And then all you do is type in your, I'll show you what it looks like. You type in your email address and your name, and we will get that information to you absolutely free right away. So this is what it looks like. Real quick, just type in your name and your email address, and we'll get that to you right away. So you also get our earnings alerts. Anybody who's on that 14-day trial, and then anybody who subscribes, you get our earnings alerts. We had 2 earnings alerts yesterday. We'll have more tomorrow. But with 2 that we did yesterday was Amgen. We bought the 167.50 call. I sent this email out yesterday at 10:45 in the morning. Amgen 167.50 calls. I bought them for $320. They're now worth about $260, so that one's down slightly. But Cree, we bought the $35 puts for $1.60, and they're now trading at $2.70. So overall, it was a nice profitable day. I'm still in Amgen, and I still have my target of $7.80. We also called out Netflix last week. We bought the 475 puts, or I'm sorry, 475 calls for $22.50 and turn them into $60 overnight. So that's all stuff you'll get access to absolutely free. I know I went over a ton of information. I apologize that I went so quick. If you have any questions, you can always email me at info@wealthytrades.com. And we are here to help. Wealthytrades.com is packed full of amazing information, resources. Let us know if you have any questions. Thanks.
All right, Tyson, thank you so much. And just to touch on your question you had in the beginning, yes, this is being recorded, so the attendees will receive an email link within 24 hours, so they'll have access to the presentation.
Excellent.
That way they'll have all that information on that last slide, which will be good. And then it'll be up on moneyshow.com thereafter as well.
That sounds great. Thank you very much.
Yes, absolutely. Thanks for joining us today, sir.
Yeah, thank you.
All right, and a big thanks again to Tyson Clayton for joining us, and thank you all for attending. Again, you'll receive an email with the link to this presentation within 24 hours, so you can view it again on moneyshow.com. Now, the next presentation, How to Trade Hot New IPOs, with founder and president of TradeLikeAPro.com, Charles Schaap, will begin at 5:45 Eastern. We have about 9 minutes remaining here. I do have Charles in the room here with me, and I'll touch base with him, do a quick audio check, and we'll be right back with you. Sit tight. Thanks for joining us.